Jonathan Williams, one of my buddies. I love this guy. He's just all over the map. I don't get him enough here on the radio show, but let's do it. He is an economist with the American Legislative Exchange Council. Go to alec.org. Jonathan, so we've got, it's growth. Compared to last year, which we are in negative growth at this time after spending trillions of dollars, which shows the government spending doesn't really move the economy forward compared to free market. Jonathan, we still had a 1.1% GDP growth rate. Does it get watered down because economists were expecting a 2% growth rate? Where are the pros and the pluses and the minuses? Because not everything is negative in the economy. Give us what was going on with this report, first quarter GDP here in this year.
Well, yeah, really a mixed bag there, Ed. And, obviously this is a big decrease from what we saw in the fourth quarter, and it came in way under expectations from consensus estimators, as you referenced there. A couple of real, still positives is consumers are still driving economic growth with their purchases, right? They still have either savings from the pandemic-related payments or their wages have gone up recently and they're able to spend more. So that consumer spending portion of GDP is a driver of really keeping it in positive territory. But of course, here's the caveat. You know this, Ed, well, and everybody should just kind of keep this in the back of their mind. Whenever you see a GDP growth number, that includes government spending.
Yes.
And so in these kind of strange accounting in Washington, D.C., this land of make-believe here that I always reference, government spending automatically grows GDP, which, of course, we know in the long term as we're racking up now nearly $32 trillion of national debt. That will be paid off at some point. It is being paid off right now because of high inflation. We're going to pay it again when we actually have to pay those bills. And so obviously this is not a net positive. We're just kind of juicing the economy right now in the short term and keeping it in the positive. But I mean, of course, these bills still have to come due. And I think that's the important part when we're talking about GDP numbers. Now, on the negative side here, Ed, the drags on GDP and why it's not as high as people think is these two things are very concerning. One is obviously real estate. And this is something, as interest rates go up, we're paying this penalty for government debt, any overspending, and it's really hurting real estate markets all across the country, residential and commercial. And then the most concerning piece that's dragging down GDP right now and why the numbers aren't what consensus estimators thought, and this is the most concerning, and this is business investment is way down. I mean, we're talking like 7% reduction in business investment as they're trying to purchase inventory and other items because they don't have the confidence that this economic growth and consumer spending is going to continue. And so that's really, I think, the storm clouds on the horizon here based on this recent report.
Well, you break it down. I was going to talk about business investment was way down. When you talk about, you and I talk about the CNBC, I usually get some of my clips from that network. Their All-American survey, most businesses feel that they already are in a recession or they feel that we're going into one. Business investment is down. You also mentioned something that even CNBC, we've played the clips of a few times. If you look at the growth, you are right. Durable goods. We're not talking about planes. And I mean, it includes planes, machines, cars. We're talking like appliances and things like that. That if you took out the government spending, because the biggest spending amount was infrastructure. We know that the majority of that, if not all of that, many cases, is, of course, government funding with that. If you take that out, actually, the growth of durable goods takes a negative turn right there. When you talk to small businesses, I mean, economists are all over the map. They don't believe it's going to be a bad recession. They think it's going to be a mild recession like what we saw last year. Is that what you're hearing from some of your colleagues for the remainder of this year?
Yeah, I think that's that's at least the aspirational hope is right as we have a soft recession or some sort of soft landing here. I mean, the trick is going to be, can the Federal Reserve thread the needle and bring this thing in for the so-called soft landing when they have the dual threat still of high inflation, huge national debt issues, and then this, issues on the other side of the equation that we're talking about here with economic growth. And, this is going to be a tough one, especially, and this is where, you and I have talked about this ad nauseum now over the last couple of years. If Washington can stop adding fuel to this inflation fire, it's going to make it a light years easier to, balance this and bring us in for a so-called soft landing. There's a lot of debt out there still. Obviously, interest rates still going up in the most recent Federal Reserve meeting now at that rate over 5%. This is adding pressure to the banks, right? I mean, and if bank lending is down, this just makes it more difficult for small businesses to have that confidence to be able to, get through these next few potentially very difficult quarters ahead.
I got a couple of minutes here. Forget the McCarthy-Biden meeting, whatever is going to happen. I mean, after a couple of days, they've got to have to do something with the debt ceiling debate. It's not the greatest package that McCarthy put out there. I mean, I like to see spending go back even more. There's not really cuts. They're just kind of freezing it. But hey, I'll take it. Believe me, I'm not going to. But they don't interest in entitlements. What do you think is going to happen? Is this going to be like one of these government shutdowns? Everybody's going to come together at the last minute in the month of June. What do you think is going to happen? I got about a minute.
Yeah, I do think that, they're going to have to come together here, and nobody wants to get to that so-called magic date, in early June. And that's not going to look good on the administration or Congress now that we have divided government. But I do think, Kevin McCarthy, to your point, deserves a lot of credit, although it's not a perfect package, and they do need to address entitlements if we want to have a chance to get this national debt situation under control, because obviously entitlements are above and beyond the national debt. We're talking 100+ trillion when you consider Social Security, Medicare, and Medicaid.
Right.
But I think it's really important that they're starting to put a line in the sand of a limit that the House is going to just pass to the 1% spending growth. I think it's a very common sense way to start to turn the ship in the right direction when it comes to federal spending.
By the way, I know you're a nonpartisan group. I got 10 seconds, but it's going to be the economy for the election next year, isn't it?
It's the economy, stupid, right? That's the James Carville line.
Wow. So I'm with you. Hey, let me know when you're back down in Florida again, man. I always enjoy seeing you. Jonathan Williams is the chief economist at the American Legislative Exchange Council. The website is alex.org. Have a good one, brother. It's always good to talk to you when you come on. So